Hi, my name is Sylvester, and are you a business owner with questions about small business loans? Or have you taken out a loan with terms you can't fully understand? Well, you're not alone, and in this forum, we're going to take a look at real questions from business owners just like yourself, break down the best responses, and of course, give our own take so you can have a better understanding on small business loans and master the art of using debt to grow your business. Welcome to Funding and Business, and let's get into this shagala bogala. Right? Okay, our first question comes from C-Town. Most of these questions we're taking them out from Reddit r/small business. You can follow us also on r/funding and business. Let's get into it. He says, "Hi, I'm looking to open a store for my small business very soon. We already found a spot and I'm ready to pull the trigger. I'm looking to take out a small business loan, only need around $10,000. I wouldn't even say I need. I have savings, but I don't want to take a chunk out all at once. Which is the best place to apply for one? I've been Googling online and I've been matched with some loans. But how do I find out what the interest rate is without applying for it? Does anyone know what the interest rate is around right now? I don't know if it helps, but my credit score is around 830. Any and all advice is welcome, including you, the viewer. If you have any suggestions or opinions onto the answer, feel free to comment in the section below, and let us look at the best responses that I came across. So one of the first responses that I would say was good would be like SBA 7A lender here. Of course, promoting themselves first. Look towards an SBA Express loan. If your credit is above 700, this would be the way to go. If it's transparent, governed by the SBA and not sketchy. Do yourself a favor too and start building a business credit when you open your business by getting a business credit card and using it wisely. This way, when you need a bigger loan, your combined business and personal credit will support it. Of course, see link below. If you need help being pointed to a reputable SBA Express lender, let me know. They probably will. I don't make these loans, but will be happy to point you to someone who can. Again, because they are governed by the SBA, you can have some comfort in knowing they are not meant to take advantage of you, but rather support your success. Okay? I just want you guys to know that SBA loans are very, very competitive. So the first response is like he should look into SBA loans, considering he has like 830. And the thing is, like, a lot of people don't even understand what SBA loans is, like small business administration loans. They just hear about it, they don't even know where to apply for it. That was the first best response. The second best response, based on my opinion, comes all the way down here, where they say, congrats on finding your store space. It sounds like you're ready to make moves. With the credit score in the 830s, which is actually very good, you're in an excellent position to secure the best small business financing payment options. Here's how to navigate your search. Check out local banks and credit unions. First of all, I would like to say a lot of people really sleep on credit unions. Credit unions are actually one of the best places to go get funded. Why? Because credit unions are like non-profitable and they're for the members, which means like anytime you deposit your money in a credit union, you become part owner. So they'd rather give you like low interest rates just to maintain you, because you actually contributing to the bank's well-being, if you get what I'm saying. Let's keep going. They say explore online lenders. I don't know about that. There's a lot of scammers out there. Compare interest rate upfront. That's the other thing about this. With comparing interest rate upfront, you're not really able to compare any type of interest rates without making any type of application, which means they'll do like several pulls on your credit, which can hurt your credit personally. So that would be like, because it's whatever they give you as a pre-qualification is not usually what you end up receiving in the end. They'll tell you pre-qualify for 500,000, but then during underwriting, they find some few things in your business bank account, in your history, and all of a sudden you're qualifying for 50,000 at 10%. So I'd say be very careful when it comes to comparing rates, like just giving your files out there to every single person just to look at how much you qualify for, because again, they do pull credit scores, and that can hurt your overall credit. It says SBA microloan, number 4 says SBA microloans are worth a look. So the Small Business Administration offers microloans up to $50,000 with interest rates averaging 8% to 13%. They are a great option for the best small business financing payment solutions, though the process can take a bit longer. The last one is consider a business credit card or a line of credit. If you need flexibility, a business credit card with a low APR or line of credit could work. Both let you borrow what you need without locking into a fixed monthly payment. With your savings as backup and excellent credit, you can find the best small business financing payment option that aligns with your goal. Take your time comparing offers. So again, they're actually talking about you comparing offers from different banks, which means they might have to run your credit. So if we go back now to the question itself and I give my own take, personally, first things first, when somebody asks about what is the best interest out there, it's a really tricky situation, because you have to understand interest rates are not like a fixed number for every single person. Like I can have a 830, you can have a 830, the next guy can have a 830. We're all netting probably $500,000 the whole year with a gross of maybe, who knows, 25,000 plus every other month, or 100,000 this month, 20,000 next month. And that doesn't mean that since we all have the same credit score, since we all have the same gross, that we're going to get the same interest rate. Because sometimes you might find, like as a construction worker, I'm high risk, so my interest rate will be different from somebody who runs a restaurant. It will be different from somebody who's running a logistic company. So when it comes to interest rate, the best thing I can say from my opinion is that stop looking at the interest rate. Look at what is the cost of me acquiring capital. For example, I have a client that he has a construction company and he works with car dealerships, and he gets like almost around $350,000 in cash advances. But here's the thing, his turnover is also $350,000, meaning he does not have time to wait for the bank, because he has to build his structures before winter, or before like the cold, or before the fall. So he's in a rush. So he's not looking at the interest rate. He's more looking at what is the cost of acquiring $350,000. So in his head, it's like I have to pay 25% just to acquire $350,000 and make $350,000 on top. So when you're looking for a loan, don't look at the interest rate. Look more at the cost of acquiring the capital. And by that I mean, like, make sure also that if you find yourself afraid of taking the loan, it's because you cannot trust the opportunity you have. Do not take a loan for an expense that has zero return on it, because at the end of the day you're going to be in a hole. So make sure you're investing it in something that has a return that can pay off this debt. If you're trying to take a loan to salvage your business, that's very risky, and 9 out of 10 times you end up acquiring more debt and more debt. So if you find yourself in that position where you need a loan to fix a big problem that has no return, you need to go back in time and look at where did you go wrong. Did you miss a few fundamentals? Because acquiring a debt will not change the outcome if your business is sinking. It'll make your business more unstable. So first of all, go back, look at your fundamentals, look at what did you do wrong, and then find other avenues where you can acquire capital that doesn't have an interest where you're paying more than you're actually bringing in from your business. So that's what I would say. Him asking for this, he should more look at, like, his business is more like for 10,000. He should say, like, how much am I making back? So if I'm going to take $10,000 and I'm going to make $9,000, then he should not even be afraid of 10%. He should not be afraid of 20%, because at the end of the day, if it's 20%, that's $2,000 he's paying, but he's making $9,000 on top, meaning that's $7,000 extra. So the cost of acquiring the capital in this situation will be like he has to pay $2,000 just to acquire $10,000 that he can use to make $7,000 on top, and then pay back the principal, which is the $10,000 plus the $2,000, and just be left with $7,000. Hopefully that makes sense. And if you're also facing any type of problems, feel free to call us. If you have any more suggestions, please leave it in the comment section below, and hopefully we were able to acquire some more information and educate ourselves on small business loans. I'll see you in the next one.